Guys, this is massive. Fidelity have just been approved by the UK's Financial Conduct Authority to let everyday retail investors buy their physical Bitcoin ETP, and that changes everything. For years, the UK has been dragging its feet while the US and Asia raced ahead with ETFs and institutional crypto access. But that ends today. Fidelity, one of the biggest asset managers on earth, just opened the door for you and me to hold regulated Bitcoin exposure inside traditional accounts. So yeah, this isn't just another ETF headline. This is the moment the UK goes full crypto. Let's break it down.
I am not a financial advisor. This video is based solely on my opinion on what I'm personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I'm not a financial advisor.
So here's what went down. Fidelity International, the UK arm of Fidelity Investments, officially got approved from the FCA, that's the Financial Conduct Authority, to offer retail investors access to its product called Fidelity Physical Bitcoin Exchange Traded Product, or an ETP for short. Now, before this approval, that product already existed, but it was strictly limited to what the FCA calls professional investors, hedge funds, wealth managers, family offices, institutions, basically everyone except for me and you. What this new ruling does is remove that wall. It means regular people, retail traders, long-term investors, anybody with a UK brokerage account that offers ETPs will soon be able to buy and hold a product that directly backed by real Bitcoin held in cold storage custody. That's key. It's not just synthetic exposure. It's not a CFD contract, and it's not some wrapped token. This is a fully backed, physical, settled ETP that's as close to holding actual Bitcoin as you can get inside a regulated wrapper. Fidelity isn't new to this game, by the way. They've been running crypto desks and custody services for years, mainly for institutions. But this is the first time the UK arm has been allowed to open that access to retail. And this didn't just appear overnight. It's been in review for months as the FCA slowly shifts its tone from crypto is risky to crypto is here to stay, so let's regulate it properly. Now let's be real, the UK has been behind. The US launched Bitcoin ETFs back in January, and it lit the market on fire. We saw billions pour in from day one, with names like BlackRock, Fidelity US, and Grayscale sucking up supply faster than miners could create new coins. The UK, meanwhile, was sitting on the sidelines saying retail access, no, it's too risky. But Fidelity's persistence just changed that. This approval is the first major signal that the FCA is finally catching up with the rest of the world. Why is that such a big deal? Because once a giant like Fidelity gets the green light, it sets a precedent. Others will follow. BlackRock UK, Wisdom Tree, 21 Shares, you name it, they're all going to want a part of this. And the knock-on effect is mainstream adoption. Think about it. Every time regulation catches up, we remove one more barrier between the average investor like me and you and crypto. This ETP could soon appear inside standard retail platforms, the same ones where people buy stocks and index funds. It could end up in pension portfolios, tax advantages ISAs, and wealth management dashboards. For millions of people who've been curious about Bitcoin but hesitant to mess around with wallets and private keys, this makes it simple. They can click buy inside their Fidelity app and instantly hold exposure to real Bitcoin under UK regulation. And the symbolism here matters too. Fidelity isn't some shady exchange from nowhere. They manage over $4 trillion globally. When a company like that moves deeper into crypto, it sends a message to every other legacy finance firm. Get on board or get left behind. So let's talk about what this could do for Bitcoin's price. Historically, whenever a new institutional or regulated vehicle opens, we see one thing: buy pressure. Remember January 2025 when the US ETFs went live. The first 48 hours saw over 1 billion in inflows. Within weeks, Bitcoin shot past 105,000 US dollars. Before it cooled off just a little bit. That was the biggest inflow event in crypto history. Now, the UK's market isn't as big as the US, but the effect still matters. The more regions that open up regulated on-ramps, the more liquidity flows into the ecosystem, and the less Bitcoin is actually left on the exchanges. Fidelity's product is physically backed, meaning they need to buy actual coins to match investors' demand. Every time somebody buys a share of that ETP, Fidelity has to acquire more Bitcoin from the market to keep it one-to-one. That's literal buy pressure backed into the system. And the timing couldn't be better. Supply is getting tighter post-halving, miners are selling less, and long-term holders are not letting go. So combine scarcity with new demand, and you got the perfect setup for another breakout cycle. But there's a second layer effect that people often miss. It's credibility. Institutional acceptance doesn't just create buy-in, it creates confidence. When average investors see names like Fidelity, BlackRock, and the FCA all involved in crypto, they start thinking, okay, maybe this isn't just a scam after all. That shift in sentiment from skepticism to legitimacy is what triggers new waves of adoption. It's what we in the Wolfpack call phase 2, adoption. The point where early skepticism flips to mass participation. Now let's hit on regulation, because this approval didn't happen in a vacuum. The FCA has been under pressure for months to show it can balance innovation with protection. They've seen data. Crypto adoption in the UK has doubled since 2022, with millions holding some form of digital asset. What this Fidelity approval does is set a framework. It shows that if a company has robust custody, transparency, and consumer protection, the FCA is willing to approve crypto products. That's the real story, not just the ETP itself, but the message it sends. The UK is opening the door to responsible crypto access. You better believe the rest of the financial sector is watching, because once the FCA stamps approval on this one, it's hard to justify blocking others. We could see Ethereum ETPs next, maybe even multi-asset crypto baskets, all under proper oversight. That's when the big money comes in. Inside the Wolfpack, we've been talking about these things for months. We always say, watch what the institutions do, not what retail says. Institutions have been quietly loading up since last year. They weren't scared by the dips, they were accumulating. Now Fidelity just confirmed it. They're not only holding Bitcoin, they're distributing it to retail investors through regulated product. That's a massive bullish signal. It's proof that smart money is positioning for the long game, while most social media is arguing about the memes. But what's most important about the Wolfpack is we try to see what's happening before the mainstream news even wakes up to what's going on. Because when the Fidelities of this world start stacking, you want to be on the same side of that trade, not chasing the top weeks later. If you want to join us inside the Wolfpack, there is a link in the description, or you can head over to milkshakematty.com where you can go and follow the Crypto Wolfpack link there. We cover this type of institutional movement every day in the Wolfpack. Community is full of traders who are turning that data into real wins. Here's what most people don't realize. When Bitcoin gets approved for a new investment vehicle, it opens the door for other cryptos too. Look back at the US. Once Bitcoin ETFs launched, it took less than 3 months for Ethereum ETFs to get the green light. That's because regulators and institutions gain confidence from seeing the Bitcoin products perform safely. The same thing could happen here in the UK. If the Fidelity Bitcoin ETP sees strong demand and no issues, the FCA will have a model to follow. That means we could soon see ETH ETPs, XRP trusts, Solana funds, and more. Every new product adds liquidity, legitimacy, and exposure to the crypto market as a whole. Now, let's not forget, Fidelity already manages traditional ETFs that hold tech stocks like Nvidia and Apple. Imagine when they start marketing a blend of tech and crypto growth fund to their clients. We're witnessing the line between traditional finance and crypto blur more and more every single day. If you're in the UK, once your brokerage lists the Fidelity Physical Bitcoin ETP, you'll be able to buy it in the same way you buy any stock or ETF. You'll get exposure to the Bitcoin price without needing to manage wallets, keys, or exchanges. Now, personally, I still believe in owning real crypto. Not your keys, not your crypto. But for beginners or institutions, this is a perfect on-ramp. It means family offices, pension funds, and financial advisors can start recommending crypto exposure without breaching compliance rules. That's a game changer because it turns crypto from a niche investment into a mainstream allocation. Now zoom out for a second, because this isn't just a UK story. Every region that opens up retail access puts pressure on others to follow. Europe already has a few ETPs under MiCA regulations. Singapore and Hong Kong are expanding their frameworks, and even Australia is gearing up for their first wave of crypto ETFs. The UK was one of the last major markets holding out, but not anymore. So expect a domino effect. Once people in London start buying regulated Bitcoin exposure, Regulators in other countries will want the tax revenue and investor participation as well. It's globalization in real time. Remember, markets move on momentum, and right now, momentum is screaming towards mass adoption. We should also be real. Not everything about this is perfect. Whenever institutions get involved, there's always the debate about custody risk and centralization. Some hardcore Bitcoiners hate ETPs because they mean people don't actually hold their private keys. The provider does. And that's a fair concern. But at the same time, we need to acknowledge reality. Not everybody wants to manage cold wallets. Some people just want exposure, and products like this make it safe and accessible. The key is education, not what you're buying. ETPs are a gateway, not a replacement for real crypto ownership. As long as people understand that difference, the move is overwhelmingly positive for me. So here's the big picture. We're watching history unfold. In 2021, crypto was in the Wild West. In 2022, it was the crash and the cleanup. In 2023, institutions started sniffing around. And in 2024, the US opened the ETF floodgates. And now in 2025, the UK is officially stepping into the arena with retail access to physical Bitcoin ETP. The dominoes are falling exactly how we predicted. Regulation, institutional access, then retail adoption. And guess what comes next? Price discovery. Once this kind of product is live for a few months, you'll start seeing major price ratings and analysts build Bitcoin into their models. Don't be surprised when you see headlines like Fidelity Bitcoin ETP hits record inflows, or UK pension fund allocates 1% to Bitcoin. It's coming. I'm telling you, you will see these headlines. If you've been following this channel for a while, you know we've been ahead of these moves again and again and again. We called the ETF approval before it happened. We warned about the market shakeouts before the crash. And we've been tackling institutional accumulation for months. So if you want to stay ahead of the next wave, not just to react to it, come and join the wolf pack. Inside, we share live data, wallet movements, exchange inflows, and also the signals that are driven by the data. You can join via the link in the description, or you can head over to milkshakematty.com. As always, trade smart, keep your risk tight, and don't chase the green candles. You already know how to do it. This is a historic day for crypto in the UK. Fidelity's approval doesn't just make headlines, it rewrites the rule book. The era of crypto being outside the system is ending. The era of crypto becoming the system is beginning. Stay tuned, stay focused, and as always, remember this: the strength of the wolf is in the pack.